What if you were to find out that the retirement plan you are building is not going to end up doing what you wanted it to do? What if you were to discover that you're building an account you don't even know what you're going to owe? Hi, my name is Tom Love, and I'm the founder of the Breakaway League. We teach people how to use the tax code for their benefit and how to accumulate as much wealth as they want off the radar screen of the IRS for income tax purposes using the Internal Revenue's tax code. I'm going to give you an example. If this circle represented all of the assets that you have accumulated over your lifetime that can be used to produce an income for you in retirement, and let's assume that that circle is a pie. If I take my knife and I cut into the side of a pie slice and hand you the knife and then say, draw for me how big of a pie slice you want to give the IRS every month of your retirement plan. How big of a pie slice would you draw? Most people tell me, I don't want any of it, I want that. The problem is, that has not only existed in the tax code for 109 years, here's what most people are doing. This is how much they're going to be giving the Internal Revenue when they go to retire. And people aren't planning for a retirement they could afford. They're planning for what little's going to be left over after this chunk is taken out. Let's talk about wealth here for just a minute. If we could put 100% of our wealth into a circle that's a 109-year-old tax code. This isn't new. This isn't some lawyer's interpretation of the tax code. This has existed for 109 years. Dollars that go in here can be pledged as collateral, and the distributions come out with no income tax liability. Let me help you with this. No 1099s. Meaning, this money that's being generated does not show up on a tax return. Perhaps you've seen the three wealthiest people in the country, with their tax return being leaked, paid very little income tax. Well, the reason they paid very little income tax is they had very little income. Now, they had great cash flow. They had margin accounts. They had mortgages. They had life insurance products. They didn't have income. I don't believe there's any loopholes in the tax code anymore, but there sure are provisions that the wealthy have been taking advantage of for decades. This is merely an example of how collateral works. I've put money in an account that I pledge as collateral, and I use someone else's money to live on for the rest of my life. Now, there are numerous ways and strategies to build these collateralized accounts. As a matter of fact, there are 6 of them. And what I'd like to do is I'd like to share with you each of these and show you the pros and cons of which collateralized account makes the most sense for you. Click here if you're interested in finding out more about why we do what we do. Looking forward to talking to you.